This video is the best way to invest in the stock market, and you're in for a very special one. Hi, this is Mosh. I'm an investor and trader. I share with you guys my experiences so you can learn from them, and anything that I learn, I pass on to you guys. My videos are solution and evidence based, and I'll appreciate a like on this video and a sub. And if you want to be super nice, you can give me a super thanks. I started investing just over a year ago, and I have adopted many different strategies over that 1 year time. I will show you guys proof and evidence of the single best method to use when buying your stocks. That method is the buy and hold strategy. So what I'm going to do is I'm going to compare the stocks I had at the start of the year in my first ever Trading 212 portfolio video and compare it to what it would be worth currently, and the results will shock you because they shocked me. If you want to see that original portfolio update, I'll link it at the top. I am probably one of the most transparent financial YouTubers out there. I think there is a lot of finance YouTubers that chat a lot of shit and never show you the actual figures and numbers. I'm also going to show you guys how to maximize and optimize the buy and hold method. So make sure you watch till the end. So back in July 2020, that is when I done that portfolio update. One of the first ever investments I made was a company called AA. They are a breakdown cover company. So if your car breaks down, they'll come and help you out. I had 500 shares at a cost of 25 pence per share, with a grand total of £122.50. AA is currently worth 35 pence per share. So if I was to hold that stock till now, it would give me a total of £175. Now just be aware, I didn't have a lot of money at that time when I first started investing. I was just building up my trading profits. So really focus on the percentage gain. That's really the most important part. That would give me a total percentage change of 43%. Just by holding it 1 year and doing nothing else. Next up on the list, we have Aviva. So they are an insurance-based company in the UK. I used to have a lot of UK-based stocks. I had 54 shares at a price of £2.78 per share with a total of £149. Currently, Aviva is £3.89 per share. That gives me a grand total of £210 or a gain of 14%, which is amazing. That is like a crazy gain. This is why investing in value stocks is important as well. Next up, we have Barclays, which is an international bank at £1.12 per share with a total of £8.93. It wasn't much, but again, the key thing is focus on the percentage gain. The current price of Barclays is £1.66. That would have given me a percentage gain of 49% by investing in a bank. Imagine that during a pandemic. Next up, we have Boohoo. So I had 9 shares at £2.53. It was worth £22.73 in July 2020. Its current price is £2.81, giving me a 12% gain. Next up is BP, British Petroleum. I had 48 shares of this stock at £2.95. At the time, it was worth £141. Now the current price is £2.84, giving me minus 4%. Now I'm going to come back to BP when I talk about optimizing the buy and hold method and how I could have made massive gains on BP just by optimizing the buy and hold method. Next up is the BT Group. I had 55 shares at £1.09. giving me a total of £60. It is currently worth £1.82. So give me a total value of £100 or a 67% gain, which is a crazy gain. I'm a bit disappointed I sold a lot of these stocks out, but I'm showing you guys so you learn from my mistakes. And in future, I will be sticking to the buy and hold method. Next up, Centrica, 78 shares at 0.48. The current price is 0.49. So again, it was still a gain, but 1%. So barely just a gain. And they are in the energy sector. Cineworld, this has been a thorn in my backside. So I had 1,000 shares at 0.43. It has been a bit of a whirlwind ride. The previous value of all the shares I was holding was £431. Its current price is 0.65, giving me a total of £650 or a 51% gain. There has been points where this stock has been close to the £1 mark, giving me almost 100% gain. Next up is Countryside Properties. So I bought 98 shares with a price of £3.21 in July 2020. Its current price is £5.22, giving me a gain of 63%. And I think one of the big reasons for this is house prices have been going through the roof due to cheap interest rates on mortgages. Next up, we have Greencoat. They are a wind power company in the UK. I had 20 shares at £1.47. Its current price is £1.34, giving me a percentage change of -9%. So using the buy and hold method on this stock, I would have lost money. Next up is Halfords. So they repair cars. Now, I had 101 shares at £1.47. Its current price is £3.82. And I remember I done a whole video on Halfords and why I'm buying Halfords. If I stuck to my original research and stuck to my guns and held this stock, I would have been up 159%. Always during a recession, the used car market does well. It happened many times before. And when people have a lot of used cars, they're doing a lot of servicing and repairing on those cars. This would have absolutely smashed it if I held on. Next up, we have HSBC, which is another international bank. I had 34 shares at £3.53. Now its current price is £4.01, giving me a total gain of 13%. So again, the financial sector are recovering because they're a bit more confident in the economy. Next up is Intel. I had 3 shares at £38. Now the current price, I've done the conversion from dollars into pounds because this is a US stock. So its current price is £40 with the current foreign exchange rates as it is today. That would have given me a percentage change of 5% gain and a decent gain for Intel, and it has had a lot of problems this past year. I had 6 shares of my clean energy ETF by iShares. Around July 2020, I bought it around £6.47 per share. Its current price is £9.52 in July 2021, giving me a 47% gain, which is really good. That's an amazing gain. Next up, we have the Mitty Group. So they do a lot of contracting for the government. I had 200 shares at 37p. Its current price is 63p, giving me a total gain of 72%. This is another one where I've done a lot of research on and I knew it was going to do well, but I sold out too quickly. And remember, if you want a free share worth up to £100 with Trading 212 or free trade, all you have to do is open up an account using my link below, deposit £1 and they'll give you a free share worth up to £100. Another one that I was very bullish on at the time and wanted to hold, but again sold out too quickly, was National Express. It's a UK bus company. I was always confident that we will come out the pandemic and things will start getting back to normal. I had 13 shares at one point at £1.48. Its current price is £2.63. That would have given me a gain of 77% from a bus company. Imagine that. Next up, we have Neo. Initially, they used to offer it in the ISA account, but then they changed it so you had to go into the invest account. I had 9 shares at £9.08. Its current price in pounds, because it's generally done in dollars, in pounds is £33.57, giving me a percentage change or percentage gain of 270%. In my invest account, I have it over 1,000% because I bought it at $4.50 last year. Next up, we have an index fund, the SPDR S&P 500 index fund. I had 3 shares at £10.06. It's currently worth £11.36, giving me a percentage gain of 13%. And I think this was a high dividend yield. Next, 50 shares of Telefonica. I bought it at £2.22. It's currently worth £2.45, giving me a nice healthy gain of 10%. And I'm sure you can see the pattern forming. Pretty much every single stock I had would have been in a gain, apart from the 2 right now. Next up, we have Tullow Oil, again, a oil extraction company. I had 50 shares at 27p. It's at 46p, giving me a gain of 68%. Next up, we have Vanguard All World ETF. I had 4.5 shares. I bought it at £70.50. It's currently worth £86.50, giving me a gain of 23%, which is really good for a Vanguard index fund. If you know about index funds, I've done a whole video, I'll link it at the top. Another index fund I had was the Vanguard High Dividend Yield. I had 4 shares at £38.59. It's currently worth £45.16, giving me a gain of 17%. Another Vanguard, I had a lot of Vanguard and a lot of index funds back in the days because I've been a bit conservative. Now I'm a bit more aggressive investor. It's the Vanguard S&P 500. So I had 35 shares at £47.50. It's currently worth £60.21, giving me a gain of 27% for buying into the S&P 500 index fund. So that done really, really well. Lastly, I had Wells Fargo at 19 shares at £19.79. Its current value in pounds is £32.79, giving me a gain of 66%. Again, this was one that I always knew would recover. The total gain I would have had if I just used the buy and hold method, so I bought a lump sum, held it for 1 year, I would have made £6,529 or a gain of 43%. And if I compare that to the Vanguard S&P 500, we all know the annualized return on that is 10%. I would have beaten that 4 times round. Now, if you compare that 43% to the S&P 500, I had that in my portfolio back in July 2020, it was 27%. So I beat the market just by using the buy and hold method. This is the evidence and proof that the buy and hold method always wins. Next, I'm going to talk about how you optimize the buy and hold method to maximize your gains and maximize your profits. First thing we talk about is dollar cost averaging. Dollar cost averaging is where you buy at certain intervals throughout the year instead of just using a big lump sum. What that does, it neutralizes the short-term volatility of the stock. Now, as you saw on my portfolio with BP, I had 48 shares and I was on -4%. So let's see what it would look like if I was to use the dollar cost averaging method and see what happens to that percentage change over the course of the year. Now, I'm going to put a couple of conditions and I'm going to be very conservative in the conditions. I'm going to look at the historic prices and I'm going to put the condition in that I'm going to buy in the very last day of the month at the highest price. So being very conservative. Okay, so I'm just on Trading 212. I'm going to find BP. So I'm not going to use any fancy formulas. Remember, all we're doing is seeing what would happen if I was to buy BP on the very last day of the month at its highest price. From the graph, you can see on the 31st of August, its highest price was £2.64. So let's go into September. On the last day of September, its highest price was £2.28. October was £1.97. November was £2.58. December was also £2.58. January was £2.75. February was £3. March was £2.97. Remember, we're using the highest price. April was £3.7. May was £3.16. And June was £3.27. Now, if we put all that data and work out the average price by buying at the last day of the month at the highest price, that gives us an average price of £2.75. Now watch this. This is how amazing dollar cost averaging is. I had 48 shares. My average price was £2.75. giving me a total of £132. The current price is £2.84, giving me a current total of £136, giving me a gain of 3% just by using the dollar cost averaging, using no other logic apart from buying on the last day of the month at the highest price. We can optimize this further by using another method that I use now called buying the dip. So what you'll be doing is using the dollar cost averaging method, but this time instead of buying the last day of the month at the highest price, you'll be buying on the dips. To work out where the dip will be, we can use indicators. The key ones that I like using are Bollinger Bands and the relative strength indicator. I've done videos on those before. I'll link it up at the top. So I've plotted my Bollinger Band and I'm just going to plot my relative strength indicator. I'm not going to change the settings. I'm going to leave them as they are. So I've plotted my Bollinger Bands and I've plotted my relative strength indicator. Okay, so let's go backwards now. So let's go back to around August time. All right, the two conditions I'm going to use to figure out where the dip is if it's below my lower side of my Bollinger Band and if it's below 30 on the RSI. That's going to give me the indication to buy. Now, when you're buying the dip, what the strategy is to buy a larger amount compared to using a dollar cost averaging method by buying every month. So this time, every time there's a dip, you're buying twice or 3 times the amount that you normally would have done. All right, from August, I can't really see anything based on my conditions. I have to go in September, and I can see September the 20th. You can see it's below my Bollinger Band and it's below 30 on the RSI. I'm just going to use the closing price of the day. So we've got £2.36 on the 20th of September 2020. All right, let's keep going along and see if I can find any other events. Okay, I can notice another point on the 1st of November right here. It's below a Bollinger Band and it's below the RSI. So the closing price for that is £2.14. All right, if we go further along, I can notice another point here on the 28th of November, it's below our Bollinger Band and it's below the 30 mark on the RSI. So again, remember, you're not buying a normal amount, you're buying more than what you usually do when you do buying the dip buy-in. So the closing price for that is £1.92. And if you keep going along, I can't see any other points. Actually, here, personally for me, on the 1st of Feb, I would have bought, it's below the Bollinger Band and it's close to the 30 mark on the RSI. So personally for me, I would have bought at that point. So the closing price for there is £2.54. And if you keep going, I can't see any other points. Okay. Now plot the data and you can see buying the dips, the average price gives £2.24. So now 48 shares, average price by using the buying the dip method is £2.24. The current price is £2.84. That gives us a gain of 27%. How crazy is that? So remember, the lump sum method over the year gave us minus 4%. The dollar cost averaging method gave a 3% gain over the whole year. The buying the dip method gave 27% gain. So that is how you optimize the buy and hold method. And you can see some crazy returns using buying the dip, dollar cost averaging, and buying the hold method. And remember, I'm not using anything very technical or any sort of genius. It's just using simple logic, and simple logic always works. I hope you enjoyed this video and I'll appreciate a like and a sub.